Good evening, everyone. This is Aohua from iBear44. Today, I would like to share with you very briefly about some of the key findings of the financial situations of one of my favorite company called Medtronic and some of the business insights behind them. And finally, I will make a reasonable forecast regarding its stock performance. Medtronic is a company headquartered in Dublin, Ireland, and it is among the world's largest medical technology services and solutions company. Medtronic was founded in 1949 and today serves healthcare system, physicians, clinicians, and patients in more than 150 countries worldwide. Medtronic new operating model was effective February the 1st, 2021 this year. The new operating model moved from a group structure to a portfolio structure, namely cardiovascular portfolio, neuroscience portfolio, medical surgical portfolio, and diabetes operating unit. Now, in terms of the year-over-year revenue, Medtronic has demonstrated relatively stable, upbeat growth over the last 5 fiscal year, with a notable exception during the 2019 fiscal year, where it suffers from a negative 5% net reduction in annual growth rate. In terms of the cost of goods sold, Medtronic has managed to increase the quantity of product sold and therefore lower down its inventory, which allow it to stand at 11% growth rate of COGS at the 2021 fiscal year. The operating expenses has seen a bit of fluctuations over the course of the last 5 years, where it stays positive between 3% to 6% during the 21 to 20 fiscal year and 19 to 18 fiscal year, and negative during the 2019 and 18-17 fiscal year. Major changes mainly result from fluctuations in restructuring changes, certain litigation charges, and other operating expenses. Now, taxes has also been reduced significantly over the course from 2019 to 2021 fiscal year. The net income has seen a significant increase during the 1918 from where it starts to decline to negative 24% at 21-20 fiscal year. And as a result of this, the EPS, or the earnings per share, has also suffered from a downward trend since 1918 and stands at negative 25% at 21-20 fiscal year, which is this year. Now let us take a look at the revenue. The revenue increases by 4%, and it is a reflection and plausible sign of recovery to date from the depth of COVID-19 experienced in the fourth quarter of fiscal year 2020. The diluted GAAP earnings per share decreased by $0.88 or 25%, mainly as a result of the decrease in tax benefit driven by the prior year release of a valuation allowance, decreases in gross margin, increase in restructuring and associated costs, and the impact of currency exchange rate changes. The operating cash flow decreases of $1 billion is primarily driven by a reduction in both the cash flow and by the cash inflow from customers and upside in income taxes. The cardiovascular revenue for fiscal year 2021 were $10.8 billion, an increase of 3% as compared to the fiscal year 2020. Currency had a favorable impact on net sales for fiscal year 2021 of $131 million. The increase in revenue is primarily due to the recovery of global procedure volumes from the downturn experienced in the fourth quarter of the fiscal year 2020, resulting from the pandemic. The diabetes sales for fiscal year 2021 were $2.4 billion, an increase of 2% as compared to the fiscal year 2020. Diabetes revenue increases for fiscal year 2021 were primarily attributable to growth in the MiniMed 780G insulin pump system and integrated CGM in the international markets. A decline in the US was also observed due to new patient start delays and continued competitive pressures. The cost of products sold for fiscal year 2021 and 2020 was $10.5 billion and $9.4 billion respectively. The increase in cost of products sold as a percentage of net sales in fiscal year 2021 is because of the increased expenses as a result of a full fiscal year impact of COVID-19, primarily due to period expensing of some of the fixed overhead costs due to idle capacity at certain manufacturing facilities and increases in reserves for excess inventories, as well as charges associated. Now, in terms of the R&D expenses, in the fiscal year 2021, Medtronic entered into arrangements with third parties to fund the development of certain technologies in the diabetes segment. As for the selling, general, and administrative expenses, the decrease in these expenses as a percentage of the net sales in fiscal year 2021 as compared to 2020 was primarily due to a net sales growth coupled with lower travel and discretionary spending due to the pandemic, offset by higher annual incentive accruals and increased restructuring and associated costs. Do we suggest to purchase Medtronic's stock or not? Medtronic has been playing a pivotal role in the healthcare and in particular the medical device sector, and it is safe to assume that government policies will not be affecting and cutting the product prices, given the fact that those products are of immediate necessity to patients, especially during the pandemic, with an estimated upside of 32% at $144.21 US at the end of 2022. It is reasonable to suggest a buy at the moment and sell once the target is reached. This would conclude my presentation, and thank you for your time. Thank you.